Hi, my name is Sabrina Barella. I'm a mortgage loan officer with Military HomeSpot Lending. Today, I want to talk to you about the difference between a down payment and closing costs, especially where the VA loan is concerned. So first off, let's talk about the fun stuff, the down payment. With a VA, there is no down payment, one of the perks. 100% financing on a VA loan up to the appraised value of the home. So what that means is that as long as the home appraises for the sales contract amount or higher, then they will finance that entire amount and you do not have to come in with a percentage of that like you do on a conventional FHA or any other type of loan. Closing costs, on the other hand, are something that often get confused. However, they're completely different. They are the third-party fees that it takes to make this transaction happen. The closing costs are your responsibility as the buyer to have a plan to cover one way or another. And I will go over those ways that you can cover them towards the end of the video. But first, I want to quickly just go over what make up closing costs. So all these third-party fees, all the third parties that it takes to come together and get this home title transferred from the seller to you. So these are going to include things like the underwriting and processing fees from the lender. There are going to be title fees, escrow fees. There's termite clearance that has to be paid. The VA is going to send their appraiser out and they have to get paid. Your homeowner's insurance policy that's going to be paid annually, so you're going to pay your first year up front. And then you're also going to set up your escrow account and they will collect a minimum 2-month buffer. Sometimes there's going to be more depending on the time of year that you're closing. Based on when the homeowners is coming due, when taxes are coming due, etc. They're going to collect and just get that set up so that the next time property taxes are due, the next time your homeowners is due, you're going to have enough set up in that account that they can pay it out of that account. So you're not going to be making those payments out of pocket. Those are going to be paid from your escrow account. So all these different things are coming together for your closing costs. Now, closing costs as a percentage or what you can expect with the VA loan. Now, because VA does not have a minimum credit score requirement, there is quite a range on closing costs. So they could be 3 to 4% on the low end, or they could be as high as 6-7% on the high end. And where that factor is going to come in on the range is where your credit score sits. So if your scores are, if you've had some credit challenges in the past, maybe your scores are in the 500s, then you are likely to see the higher range, that 6-7% range. But better credit, 640, 680, 700s, and higher, those you should see closer to the lower in that 3 to 4% range. So that's what you can kind of expect. Your loan officer that's actually doing your pre-approval should be able to tell you, once they have your file and your pre-approval set, they should be able to tell you a very good estimate for what that percentage is going to be for you. So that is that. What else can we talk about? Let's see. We talked about the range. We talked about what it covers. Well, you know what? Yeah, let's go into how can you get them covered. So there are 4 main ways that I would say you could look at getting those covered. Number 1 is going to be, or I shouldn't say covered, but how we're going to handle these, right? How we're going to get them paid. Number 1 is anything that you yourself have saved. So you've been setting aside, you've been planning, you're ready to purchase a house. Each money, each month, each payday, whatever works for you and your budget, be setting money aside, no matter how much it is. But be setting it aside. Cut corners where you can. If this is a goal to buy a home, then it is worth it and it will be worth it in the end. So anything you have saved, anything you have in your bank accounts, that most definitely can be used. Number 2, you can get gift funds from a family or close friend. So you can have them wire money to the escrow company when you are under contract, and then we would just send them an email form that is a VA gift letter. And what gift letter means is basically we're saying it is not a loan. They're not expecting you to pay it back. This is their gift from them to you saying, we want to help you buy this house. So gift funds can be used. You can also, if you have a retirement account, so if you have a TSP, if you have a 401k, any type of retirement funds that you've been saving up from, whether it's from the military, whether it's from a current job, you can actually do an early withdrawal when you are under escrow, when you're getting a mortgage. and you will not get those other early penalties that you would otherwise if you were just pulling it out for the sake of having cash, right? So if you're doing it for the sake of buying a house, you would not get the normal early penalties. So you can pull from a retirement account, which is amazing. And they typically, most companies, which you can check this ahead of time, most of them, that whole process in getting your cash can be completed within usually about a week's time. I'm not an expert on that, so check with your own company, but typically from what I've seen in the past, it shouldn't take more than a week. So you could literally wait until you're under escrow, find out how much you need so you're not pulling out more than you need to, and then put in that withdrawal request and just get it handled. And then the last thing would be to ask the sellers. So this would be when your realtor is writing up offers, each offer that they write up, they could add in asking the sellers, can we have X amount or X dollar amount or X percentage in closing cost credit to help the buyers get into this home. Whether the sellers say yes or not is ultimately gonna be up to them. So it could be a number of factors of how quickly, how urgent is it for them to sell? Are they wanting to, move on, or, do they have another house waiting for them? Whatever that looks like. How long has the house been on the market? Oftentimes what I've seen is that the longer the houses have been sitting on the market, the sellers are going to be more, have more sense of an urgency to close, so they will give a higher credit. In markets where it's just been sitting, or maybe you like them, I would say maybe they like you. Maybe, that could be a thing too. So anyhow, bunch of different things, but that is something that we would need to, the lender would need to, we need to figure out exactly how much you would need to fill in that gap between what you have to bring to the table, to what you have gift funds to bring in. And it doesn't have to be just one thing, you guys. So it could be a combination of one or two of these things. It could be a combination of all four of those things, whatever it takes to get that final amount done. So anyhow, I hope this helps. If you have further questions, feel free to reach out. My information is in the comments. My company, we are personally licensed in 42 states across the country. So I would love to help you if you'd like to explore numbers. We have an instant pre-qualifier tool, which the link will be in the comments as well. You literally can just fill out your information in a few minutes with no hard credit check. It's a soft pull, which does not ding your credit, and it will literally instantly, just in a few minutes, tell you how much you can qualify for. So check it out. Feel free to send me questions if you have them, or if you'd like to connect and schedule an appointment, look me up, okay, you guys? So have a wonderful day. Again, my name is Sabrina, and I look forward to connecting soon.